is going to be the USOIL spot. And in fact, the last 24 hours has been quite impressive on the USOIL spot, as we did capitalize on a buy opportunity during yesterday's trading session after price action did break out of that level at the $71.20 level, and we saw how price did move about a 150 pips in our direction before the bearish momentum began. And for those of us who capitalized on this opportunity, I do hope you moved your stop losses accordingly. If you had done so, you must have been taken out of this position with a reasonable amount of profit. And as it is right now, we begin to see some interesting setup going on in this market, so we shall be looking at that in a moment. But before we go into the details, the technical details on this chart, it is very important for us to understand the reason behind the recent surge in crude oil prices and what is going to be happening today as regards to what will be driving the market sentiment. Now, the recent surge in crude oil prices is underpinned by several factors, which we will be talking about in a moment. Notably, the crude stock data from the United States from yesterday's report exceeded market expectation for the week ending January 5, revealing a substantial reduction for the crude oil stockpile. Furthermore, concerns about oil supply intensified following a significant attack by the Iran-backed Houthi militants on vessels in the Red Sea. The American Petroleum Institute released its weekly crude oil report, indicating a substantial decline of 5.215 million barrels, surpassing the expected fall of 1.2 million barrels. And if we look at this, and if I get my calculations right, it's about 4 million deficit compared to what the expectation had. For me, this is a very high variance, which further shows that the demand has increased, and whenever there is a demand, an increase in demand, we expect the price of that asset to soar. And as a result of this, we saw a over 150 pips move from yesterday's trading session to emphasize this detail. Now, today, the U.S. Energy Information Administration is set to release the crude oil stock change report as market participants await crucial insight from today's report. Our strategy at this point is to rely on our technical skills, identify key structures, and see how we can strategically position ourselves for the next move. Now, in that regard, let's scale up into the daily time frame. Let's see what we saw at the beginning of the week. And for the sake of those who are joining us for the first time, they have the privilege of being on the same page with us. So, scaling up into the daily time frame, this was what we saw at the beginning of the week, and this played a major role in guiding our decisions. So the first thing we saw on the daily time frame, after taking into consideration the nature of price action since the month of September, we saw how price action had consistently and uniformly found lower highs in this market. And as a result of this observation, we did connect the series of lower highs, giving us a beautiful descending trend line to work with. And as long as price remains below our descending trend line, we want to be looking out for patterns and structures that supports the idea of selling. But how come we came up with the idea of buying this asset at the beginning of the week? Well, if we zoom into this current structure and look at what started happening here in the month of December, despite the strong bearish momentum, we saw how it became difficult for sellers to break through the $69 area. Now, this persisted and went on. If we look at what happened in the month of January, that is the beginning of this month, we saw another rejection of that area, and in fact it gave us an higher low, which reveals the tendency that there is likely going to be a build-up of bullish momentum behind the scenes, giving us an ascending trend line to work with going forward. Now, in addition to the structures here, we did, of course, emphasize the reversal setup that's resulted from the rejection of the $69 area. As you will see, following this impulsive move into the structure, we saw how price came back into this area, and in fact a higher low here is giving us signs that we may likely be seeing a reversal setup, though this is yet to mature, but we are projecting the neckline of that potential reversal pattern around the $75.50 level and the $74 area, where we are expecting that a breakout of the zone will be all we need to confirm that price is going to the upside. And one interesting thing about this neckline zone is the fact that it also shares a confluence with those descending trend lines. So what this simply means is that when price breaks out of the neckline, price would also have broken out of the descending trend line, hereby emphasizing the fact that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, this whole structure here makes things very, very interesting ahead of this week. Now, to guide our decisions, we did have a key level situated at the $74 area, where we are expecting a breakout to further give us a beautiful confirmation of joining an uptrend situation. Now, with the information we gathered here on the daily time frame, we went ahead into the 1 hour time frame, where we begin to understand how market participant has been reacting to this current structure since the beginning of this week. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. Now, right here on the 1 hour time frame, it was obvious that the week started on a bearish note. Price started around the $73.75 level, dropped into the $72.65 level, giving us a range to work with for this week. And as a result of this range, this range here, you know how we do it whenever we identify a flat channel. We exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we did see price break down the support line during our live session on Monday, giving us our first sell position for the week as we rode that momentum, giving us over a 240 pips move. And then you know how we do it when price action moves significantly well. We move our stop losses accordingly, and on that single move, we should have been able to close with a minimum of a 150 pip move, though this is dependent on where you had moved your stop losses to. Now, during our live session yesterday, we saw a range again around the $71.20 level, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with the situation we had yesterday, a breakout of the resistance line of that range, are we going to see price come back to retest the structure today in anticipation of another wave of bullish momentum? Well, let's see what is going on in the last 24 hours. Now, one thing you will notice here in the last, I think about 20 hours or so, we can see that despite the strong bullish momentum, which was as a result of the report from the crude stock data from the United States yesterday, we begin to notice that buyers found a barrier around the $72.65 level. And every attempt by the buyers to break out of this structure has been met with strong resistance from the sellers, as you will see right here. Now, as a result of this, it is very important that we take into consideration the potentials that sellers also have around this area. Now, let's relate this latest development with the current structure. Remember, at the beginning of the week, we had a range between the $73.75 and the $72.65 area, remember? And then we saw price broke down the support line to give us our first sell position for the week. And I can still remember vividly mentioning that whenever price gets into this area, we move our stop losses accordingly, secure the current position, as we want to see how the market will react to that structure. And this is simply because of the technical expectations that whenever price breaks down a structure like this, we expect price to come back to that area at some point, retest the structure to incite a sell-off to the downside. And in fact, in the last 20 to 22 hours now, the continued selling pressure here may likely incite a sell-off at this point to incite a downtrend move. However, in as much as the sellers continue to push price to the downside here, we still need to be very careful, as we have a couple of juncture here which has a potential platform for bullish opportunity. The first one is the neckline of this reversal pattern, and the second one is the ascending trend line we spotted on the higher time frame. And when price remains above ascending trend lines and the neckline of a double bottom structure, you expect that we still have a tendency of buying that particular asset. So as it is right now, we could see sellers push price into these structures here in anticipation of another wave of bullish momentum. So for those of us who capitalized the selling opportunity at the breakdown of the $72.20 level, well done, but please ensure you move your stop losses accordingly, as we're still within a reversal setup. And let me see how many pips move is this one from here to here, giving us a minimum of 100 pips, which is what taking advantage of. So if price get to this area, that is if it goes that far into the $71.20 level, please further move your stop losses, secure your positions while we wait and see how the market will react to both the neckline and that ascending trend line to decide what our next line of action will be. So if we see buy pressure here again, like double bottom structure, head and shoulder pattern, we do want to be part of an uptrend move. Whereas if price breaks down the structure, retest will definitely welcome selling opportunities. So let's see how this is going to play out for today. However, if price does not drop down and instead continue to find bullish momentum from this area, I'm of the opinion that a breakout of the $73 level could welcome buying opportunities, while a further breakout of the resistant line of that range at the $73.75 level will welcome more opportunities to buy, and the breakout of the $74 area will make us maximize the potential of this bullish move. So I'll only be looking out for more buying opportunities after price action takes out all the sell positions within the 73 and the $72.65 zone. So that is, I want to see price break out the structure for me to feel confident joining a bullish momentum. So as it is right now, price remains below that zone. We maintain a bearish bias, but if price breaks out of that structure, we're going to be buying. And remember what I said earlier, while we sell below the $72.20 area, as soon as price gets into the structure, please move your stop losses accordingly, secure your position while we wait to see how the market will react to that area. So this is my simple view on the USOIL spot today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever as regards to the current setup, or you need me to do some clarification in a particular area you really did not understand, feel free to let me know in the comment section.